All right, I'll read the question. I hope you've been able to download it. Rosemary, this is Rosemary Aswani. Rosemary Aswani. You can download the question from CastNet website if you're online. So the question reads, Rosemary Aswani is a resident individual who is employed as a senior financial analyst by United Homes Limited from the year 2022. She has provided the following information relating to her income for the year ended 31st December 2022. Number one, she received a monthly basic salary of 204,000. I hope we've all been able to get the question. Am I right? Have you been able to download the question? Hopefully, yes. So she received a monthly basic salary of 204,000 from United Homes and a bonus equals to 1 month's basic salary for her exemplary performance. Pay deducted during the year was 607,200. 2, terminal dues received from her previous employer for services not rendered amounted to 1,400,000. Her 4-year contract of employment was terminated after 2 years in December 2021, and payment was made as per the employment contract. Let me explain a bit. So this is a contract of employment that has provided for the period you're supposed to serve. She was supposed to have served for 4 years. However, the contract was terminated. The contract was terminated before the end of the period, so she was compensated for the remaining 2 years. So that's what the examiner is talking about. So the compensation was 1,400,000. We'll be able to include that as other income. Compensation on termination of employment contract. She had been paid for the 2 years she had worked, but then our contract had provided for compensation in case the contract is terminated before before it ends. So she had worked for 2 years. There are 2 more years remaining, but the employer paid full compensation according to the contract of 1,200,000. 1,400,000. So you shall be able to include that as other income. Then 3, a commission of 100,000 was paid to her for promoting the sale of houses, where 2 houses were sold to the customers she had referred to the business. 4, she attended a 5-day masterclass for financial analysts organized by a professional body, and the employer paid 100,000 for the seminar, and she was paid daily subsistence allowance of 12,000 shillings by the employer. 5, she was given an offer to buy a house from United Homes at 20% below the market selling price. Now, she accepted the offer and bought one house whose market selling price was 8 million. 6, she has a fixed deposit account of 2,500,000 at Maisha Bank Limited, for which she received interest of 150,000 during the year. 7, she has a life insurance policy where she pays 60% of the premiums, or the employer pays the balance. Annual premiums as per the insurance policy was 240,000 for the year. 8, she was provided with a leased saloon car of 2,000 cc by the employer for both personal use and official duties on 1st September. So it was not from January, but from September 2022. The saloon car had an initial cost of 2,800,000, and the lease charges were 36,000 per month. 9, United Homes has a medical cover for all management staff. Now, she was entitled to a maximum cover of 880,000 per year, although she utilized 420,000 on medical costs during the year. 10, she paid subscription fee to a professional body amounting to 24,000 during the year. Then her other incomes, she had royalties of 180,000 net of withholding tax. She had gross farming income of 450,000, out of which 80,000 was in respect of own consumption of farm produce. She had part-time practice as content creator, where she made 600,000 during the year. So the requirement, compute taxable income for Rosemary Aswani for the year, and then determine the tax payable from the income computed. So the title is Rosemary Aswani. Then you say, this is a statement we are preparing. Statement of taxable income. Statement of taxable income for the year ended. First December 2023. Let's say. So we'll pick the items line by line. So we start with note 1. She received a monthly basic salary, 204,000, that's per month, from United Homes. So basic salary is 204,000. We multiply by 12 months. So per year, it's going to be 204,000. We're getting taxable income per year is going to be 2448,000. 2448,000. Same point 1, and a bonus equals to 1 month's basic salary for her exemplary performance. So there's also a bonus. So these are cash receipts. Bonus is equals to 1 month's basic salary, so 204,000. Now, number 2, terminal dues received from her previous employer for services not rendered. So these were dues for the remaining part of the contract. She was supposed to have stayed working for 4 years, but the employer terminated her after only 2 years, but she had a written contract, so she was compensated. For the remaining 2 years, she get a compensation of 1,400,000. So we shall tax the compensation, but systematically. Let's first finish with the current employment. Then we'll come to the previous employment. We'll bring in the compensation of 1,400,000. So let's just leave note 2 just for the moment. We finish with the current employment, then we'll be back there. Note 3, a commission of 100,000 shillings was paid to her for promoting the sale of houses, where 2 houses were sold to the customers she had referred to the business. So she received a commission. Two houses were sold. Commission is 100,000. For referrals, so that's part of income. Number 5, she was given an offer to buy a house from her employer, offer at 20% below market selling price. So they were going to sell her at 80%. She accepted the offer and bought one house whose market selling price was 8 million shillings. So how do we treat this? To me, my interpretation, this is like a loan being given by the company of 8 million. They are charging her lower. So the benefit, how do you, no, we'll not treat it as a fringe benefit. Do we treat it as a facility? So she was given because these are the products the company deals with, and they are selling to her at a below market selling price. But this is not a loan per se, because they are not charging interest. That's why it's not a fringe benefit. So if they were charging interest, they would have compared it with the interest charge in the market, and that would have treated it as a fringe benefit. But you can see they're not charging a interest, but she has benefited. So the benefit will be the value of the property, and I'm going to include this 80%. So now what's her benefit? The benefit is the difference. The benefit is the difference. The property is supposed to be 8 million, but they are giving her a discount of 20%. So that's our benefit. So you'll say discount on home purchase. So the discount is the benefit. So this discount will be 20% of 8 million. That's a discount. The rest of the money she paid. So the rest of the money cannot be a benefit, but the benefit is the discount. So 0.2 times 8 million shillings. So that was her discount. It was 20% below the market price. So the benefit is 1,600,000. The benefit is that discount, 1,600,000. 20% discount. Then note 6, she has a fixed deposit account of 2,500,000 at Maisha Bank. Fixed deposit account. And yes, from which she received interest of 150,000 during the year. So if you put a deposit in the bank and you receive interest, there's a tax called withholding tax. Or WHT. So withholding tax is 15%. The bank will charge 15% and remit directly to KRA. And we say that is final tax. Final tax means there'll be no other taxation. That withholding tax of 15% will be the final tax. So that's it. So we are done with note 6. It has already been taxed. There's a withholding tax of 15%. That's final tax. Note 7, she has a life insurance policy where she pays 60% of the premiums while the employer pays the balance. So whatever the employer pays is a benefit. So the employer pays 40% of the premium. The annual premium, as per the insurance policy, was 240,000 for the year. So this is called life insurance. So life insurance policy. So this is paid by the employer. So it becomes a cash benefit. So the employer will pay 40% of the annual premium. So 40%. So 40% times 240,000. So 40% times 240,000 is 96,000. So that's 96,000 there. So that's note 7 done. Note 8, she was provided with the leased saloon car. So the car did not belong to the company, but they had leased it from another company. 2,000 cc by the employer for both personal use and official. So if the examiner doesn't tell you what percentage is personal and what percentage is business, you take 50-50. Then the percentage we usually tax is the one that was for personal benefit. The one that was for business benefit is not taxable. So we'll take 50-50. What else? This car is provided but from September. So again, we have to do the apportionment from September. The saloon car had an initial cost of 2.8, all right? And the lease charges were 36. So we'll compare. So there's a car. So So car, we'll put CC basics. So CC is engine capacity. So the engine capacity of the car is 2,000. I'll first start with 50%, the personal usage, 50%. Then September, October, November, December is 4 months. Then I'll put 4 months over 12. 4 months over 12. Then the rating for 2000 cc, you can get on top of your past papers. The rating should be 7,200 per month, or per year is 86,400. So we'll simply apportion. So this is 86,400 for the whole year. So you can pick it from the rates given from 1751 to 2000 cc is 7,200, the prescribed rate, 7,200 per month, or if you like, 86,400 per year. I'll pick the one per year so that I can apportion a third for 4 months, 4 over 12, because there are 12 months in a year. Then 50% because it was used for business and personal. So let me just get this figure first. This is 50% times 4 divided by 12 times 86,400 per year. That gives me 14,400. We've already apportioned. Now that will have to be compared with a number of things. We'll compare with 2% per month. I'll say 50% times 2% per month times how many months? 4 months. Times the initial cost of the car. 4 months is September, October, November, December. The initial cost of the car is 2,800,000. So times 2,800,000. Again, we'll compare with that. So this is 50% times 0.02, 2% times 4 months. 2% is per month times the initial cost of the car, 2.8 million. So this is 112,000. Then you'll also compare with the leasing charges. Leasing charges or leasing cost. Again, 50% for personal. Leasing charges, they were leasing the car at how much? 36,000 per month. So 36,000 per month for 4 months. So leasing charges, you take 50%. The personal usage, 50% times 36,000 times 4 months. September, October, November, December. So 0.5 times 36,000 times 4 months. That's 72,000. Out of these three, choose the highest. For benefits, you choose the highest. So the highest between the three would be 112,000. The value of the car for tax purposes will use 112,000. That's for the car benefit. Then you go to note 9. United Homes has a medical cover for all management staff. So it's discriminatory. It's only for management staff. So I think she's part of management. Rosemary is part of management. Because it's discriminatory, we are going to tax it. But if it was for all employees, we would not have taxed it. So United Homes has a medical cover for all management staff. She was entitled to a maximum cover of 880 per year, although she utilized 420,000 on medical costs during the year. She only utilized 420,000. So we say medical benefits. She utilized 420 during the year, so that's taxable. Okay, now before we go to note 10, she paid subscription fees, which is allowable deduction. Okay, she paid subscription fee to a professional body amounting to 24. I think we should just deduct that before we look at other incomes. So we're going to say less This is allowable deduction. Subscription. She paid subscription fees for professional body. Professional body. Professional institute, let's call it that. And she had paid annual subscription of 24,000. So 24,000 I'll deduct here. So this will give us taxable income from the current employment. Let's get that first before we look for other incomes. So taxable income from, yes?
You skipped note 4.
Yes?
You skipped note 4.
Note 4. Okay, let's look at note 4. She intended a 5-day. You should have told me immediately, but it's okay. We shall include note 4. Note 4. So note 4 says she attended a 5-day master class for financial analysts organized by her professional body, and the employer paid 100,000 for the seminar, and she was paid daily subsistence allowance of 12,000 by the employer. So there are two things. There is tuition that was paid on her behalf by the employer of 100,000, tuition or school fees, and we said school fees is a non-taxable benefit provided that the employer paid tax. So if the employer paid tax, the examiner must provide that information. Since it's not provided, you take it that the employer did not pay tax. So we'll add here what was paid for the master class. Master class was paid by the employer. So there was master class. So this master class is being paid for by the employer. Since we are not told the employer paid tax, we're going to tax it on the employee, and this is 100,000. That's one. The other thing still in note 4, she was given a daily subsistence allowance, what we call per diem, for upkeep. We said 2,000 every day is exempted from tax. Anything else would be taxed. And this 12,000 was given for how many days? 5 days. So these subsistence paid by the employer or per diem. So the employer pays 12,000 per day. 2,000 per day is exempted. You multiply by 5 days. So that's 10,000 times 5 days is 50,000. So this should give us the subtotal only for the current employment, just for the current employment. So the subtotal will be 2448,000. 2448,000 plus 304,000 plus 1.6 plus 96 plus 112 plus 420 minus 24,000 plus 150. So total from the current employment would be 5,106,000. So that's current employment. Then we go back to the previous employment contract, note 2. The 4-year contract that was terminated after 2 years, and she's paid 1,400,000 will include here as income. So 1,400,000. So this is compensation. Termination. Of contract, employment contract. She received a further 1,400,000. 1,400,000. Okay, so now we come to other incomes. in note number 11. Other incomes, there is royalties of 180 net of withholding tax. So if you recall, we said something about royalties when we were doing the concept of residence, and we were showing the difference between treatment of a resident and a non-resident. And we said, if you're a resident person and you receive royalty income, by the way, royalty is what you are paid from intellectual property. So it's the opposite of rent. Rent is paid for real property like a building. Royalty will be paid for intellectual property like copyright of a book, like patent rights. If you have patents, you've discovered some scientific discovery and so on, you'll be paid royalty. Or you're a comedian, like in a Churchill live, and you sell your work to Nation Media or whichever other media, TV47, what you receive is called royalty. It comes from intellectual property. Usually withholding tax is 20%. No, 5%. For non-resident, it is 20%. Now, if they say net, 100% minus 5%, net means what you have left is only 95%. It can help me get the gross amount. So I'll come here and say other income. Other income. Other income. So I'll say gross royalties. So gross royalties. So you can add and say 85% of net royalties. Sorry, 95, because withholding tax is 5%. 95% of net royalties is this figure, 180,000. Is 180,000. How about 100%? So 100% is the gross royalties. So 100% of net royalties is going to be 100%, would be 180,000 divided by 95 times 100. That is what will give you the gross royalties. So gross royalties is 180,000, the net, divided by 95, because withholding tax is 5% times 100, you'll get the gross amount. So let's get this gross amount. I will take 180,000 divided by 95 times 100. I'll get the original amount. The original amount was 189, 473, 473.7, maybe 0.7, something like that, 0.7. So that's how you get gross royalties, because you don't tax anything that is net. If you tax it as net, it's double taxation. You have to change it to gross. Now, since withholding tax is 5%, then if you're told net, what is left is 95%. You convert back to 100%. So it would be the net royalties 180,000 divided by 95 times 100. Next item we are in note 11 is gross farming income of 450,000, out of which 80,000 was in respect of own consumption. So again, we have gross farming income. First of all, you will apply a test. The test is this. It's called the 5% rule. If farming income, if 25% is being used for home consumption or more, then you call that hobby farming. You don't tax hobby farming. You're going to test for the 25% rule. The rule is called 25% rule. Test time. So I will take was consumed. How much was consumed? His own consumption divided by the gross. So gross farming income was 450. The total was 450. I multiply by 100. If it is 25% or more, then you don't tax it. It's called hobby farming. But if it's less than 25%, we'll include the 450. So let's test. The consumption is 80,000. Elisha, please mute. We divide by 450,000 times 100. The percent being consumed is only 17.8%. So this is less than 25%. So this cannot be hobby farming. This is commercial farming. So we must tax it. So we'll say here, gross farming income. Because what is being consumed is less than 25%. So we must include it. Gross farming income is 450 pounds. So include that. Then part-time practice as a content creator where she made 600,000. That is called professional income as a content creator. Or if you like, what would you call it? It will be called, okay. There's an activity in business. You can still make income even though you don't have a background training. It's called, I'll remember and I'll tell you. It's still taxable. Is where probably you may be doing music without any talent, without any training, but you have the talent. So that is treated as part of, that's part of trading or business income. So I'll add here part-time. So it's called content creation. Part-time content creation is 600,000. So if we add this, we are going to get our total taxable income. So total taxable income. We can add this now. From the current employment is 5,106,000. That's the current employment. From previous employment, compensation is 1,400,000. From royalties, gross is 189,473.7. From farming, gross is 450,000. From content creation, another 600,000. Giving us total taxable income is 7,745,473.7. So that's the total taxable income. If you have any question on that, please ask. Any question? Very well. Then that's the first part. They wanted that we get the taxable income from for Rosemary Aswani for the year. So that's our taxable income. So the next part, determine tax payable, if any, on the income. So we'll calculate tax on this and use the graduated scale. So the graduated scale rates, if you check any past paper recent, like if you check April 2024, which I have here, on the top page, you're going to find the rates there. Those are the rates we're going to apply. So let's apply those rates to calculate tax. So I want to calculate tax, we'll move this side. So hapo juu tutasema tax computation for Roman 2. So we'll use the current graduated scale. It says the first 288,000 per annum. So you take first 288,000 per year, take 10% of that, and 10% would be 28,800. So that's 10%. Then the next, you will take the upper limit of the next band. The next band starts from 288,001 up to 388,000. So you take the upper limit, 388,000 minus the upper limit of the previous 288,000, it gives you the next 100,000. So I'll say the next 100,000. I get 100,000 by taking the upper limit of the second band minus the upper limit of the first band. So 388,000 minus 288,000 is 100,000. Then 100,000 will be at 25%. Now that's 25,000. Then I say the next. Again, I go to the third band. The third band says 388,001 up to 6 million. So I'll take 6 million, the upper limit, minus 388,000. So if I subtract that, I get 5,600,000, I think, and 12. But we can subtract, just to confirm, it is 6 million minus 388,000. 6 million, the upper limit, minus 388,000. Yeah, we get 5612. Now, that at a rate of 30%. So I'll take 5612 times 0.3. That will give me 1683, 600. So my amount is still large. I still have 7,745,473. So it's still a big amount. So I can continue. The fourth band says, says 6,000,001 up to 9,600,000. So we can't go beyond that because our income per year is 7,745,000. So I'll just say the next. So what will be my next will be this. I will take the exact amount, 7,745,473.7. That's the total income of Rosemary. Now that I will subtract 6 million. So this is 7,745,473.7 minus 6 million. Where am I getting 6 million from? This total, 288,000 plus 100,000 plus 5612. Let's try it. You take 288,000, whatever you had already put in there, 288,000 shillings plus 100,000 plus 100,000 plus 5612,000. The total is 6 million. So 7,745, 473.7 minus 6 million. This time, at the next rate is 32.5%. So let's do that. You'll say 7,745, 473.7. If you subtract that, you get 1,745,473.7 times 0.325. That's 2.5%. We'll get 567,278.95. Then I add everything. to get the gross amount. So let me add 288,000. Sorry, 28,800 plus 25,000 plus 16,83,600 plus 567, 278.95, and the total is this 2,304,678.95. So that is my gross tax. Now I want to remove the set of taxes. Set-offs, written like this, set of taxes are taxes that were already paid. So I offset because they already paid. So the first set of tax would be payee income tax that was already deducted monthly, and we get that in note 1. Pay deducted during the year was 607,200, so you say less. Tax at source or TAS, kuna payee, which was deducted at source, they are deducted how much? At the source, they are deducted 607,200. $607,200. What else? What else? We deduct anything that was already paid. For life insurance, you're allowed to claim 15% of premiums as a set-off. If you pay life insurance or education policy or medical insurance, the motivation you are given is you're told you can offset 15%. So let's bring in life insurance. So life insurance, you find it in note number 7. She has a life insurance policy where she pays 60% of the premiums, while the employer pays the balance. Annual premiums as per the insurance policy was 240. Now use the whole amount that was paid for insurance. So you'll call this insurance relief. Insurance relief. Insurance relief is 15%. 15% of the total premiums paid during the year, but the maximum should be 5,000 per month or 60,000 per year. You cannot claim anything more than that. If the 15% is more than 60,000 per year or 5,000 per month, you choose the maximum. So 0.15 times 240,000 is 36,000, which is much less than 60,000. So I'll offset here 36,000. That is still set of tax. What else? Those withholding tax on royalties, the 5%. We said royalties kuna 5% withholding tax, then you tax for the second time using the gross amount. So let me bring in withholding tax on royalties. So we have withholding tax on royalties. Withholding tax on royalties will be 5% of the gross royalties. The gross which we had already calculated. This is becoming very long. So I'll just say withholding tax like that on royalties. It's 5% of the gross royalties. Gross royalties is 189,473.7. So that becomes 9,473.69 maybe. So that's royalties. What else? Personal relief. Personal relief is 2,400 per month or 28,800 per year. It's 28,800 per month. So whatever remains is tax payable. So let's subtract this set of taxes, 678.95 minus 607, 200 minus 36,000 minus 9,473.69 minus 28,800. The net is she's supposed to pay 1,623,205.26. So if there's any question, please ask. Anyone with a question? So that was August 2023. Question 3B, Rosemary Aswani. Now we go to the question that I mentioned earlier before somebody reminded us that this question was incomplete. So there was the next question we were supposed to do. Let's look at it. So this will be August 2023. August 2023. Question 3C. August 2023. Question 3C. August 2023. Question 3C is called Solomon Chuchu. Like that. So please try and get that question. August 2023, question 3C is called Solomon Chuchu. Actually, it's just the next sitting. So if you're ready, we'll read it. Then we can work through it together. So please try and get Solomon Chuchu. We have August 2023. Okay, we'll read together. Solomon Chuchu. So C says, Solomon Chuchu is employed as the managing director of Utamu Millers Limited. During the year ended 31st December 2022, he presented the following information relating to his income. Number one, his basic salary was 120,000 per month, net of PE. Very, very important, those three words. It says net of PE, net, 48,000, which we'll see how different that makes a question, but it makes a very big difference in a question, net of PE. We are coming across that for the first time. Number two, he was provided with lunch by the employer, but from which month? August, at the rate of 6,000 per month. So August to December. Number three, he enjoyed a medical allowance from the company, which is only available to senior managers. Again, the medical benefit is discriminatory. It's only for senior management, so we must tax it. The allowance was 12,500 per month. So he was receiving cash every month, 12,500. Four, the company paid for him life insurance premiums of 4,800 per month for each member of his family from 1st September 2022. This included himself, the wife, and the daughter. Five, during the year, the employer paid a total of 200,000 as school fees for his daughter. This amount was allowed in the company's income statement. We'll see what that means. Eh? Six, he was provided with a fully furnished house with electricity and water. The employer paid monthly rent of 50,000 for the house and deducted 5% of his basic salary for rent. The cost of furniture was 240,000, while the monthly electricity bill and water bill amounted to 1,800 and 1,000 per month, respectively. Seven, on 1st October, the company provided him with the following: a Land Cruiser, which was acquired at a cost of 3,200,000 with an engine capacity of 3,000 cc, a house servant and a night watchman whose monthly salaries were 12,500 and 15,000 respectively. The fair market value was agreed with the commission at 14,000 per month for each of them. 8, he contributed 15% of his monthly basic salary towards a registered pension scheme, while the employer contributed 10% of his basic salary towards the same. 9, other incomes for the year include he has invested in real estate from his rental house. He has invested in the real estate, and from his rental houses, he reported a net rental income of 2,400,000 after deducting the following expenditure: caretaker wages, fencing cost, loan repayment, monthly rental tax, income tax, insurance, rent and rates, advertising, partitioning and CCTV cameras, repairs and maintenance, giving us total income. 10, dividend received from United Millers Cooperative Society was 306,000. Net and interest received from Fanaka Bank was 240,000. Okay. Required: compute the total taxable income for Solomon Chuchu for the year and determine the tax payable, if any, from the income. Okay, so Solomon Chuchu, we are preparing a statement of taxable income for the year ending Okay. So the basic salary of 120,000 per month was net of payee. You cannot tax income net of payee. It has to be gross. So if you see those words, those three words, net of payee, then the approach is take the payee and add to the net salary so that you have gross like this. So you'll say basic salary per month. You say basic salary. Because it's net of payee, you'll take 120,000. Add back the payee is 14,000 per month. So it means his gross salary was 168,000. Then you multiply that by 12. And be very careful. Only do that if the examiner says net of payee. If it doesn't say, like the previous cases we've done, like Rosemary and the first case, you did not see us adding. You only add if the examiner says net of payee, like in this case of Solomon Chuchu. So we add, we say 120,000, add 48,000, we get 168,000 multiplied by 12, so that this is 2016. 2016,000, that is basic salary. 2, he was provided with lunch. Remember, free meals by the employee, by the employer, should be by the employer, from 1st August of 6,000 per month. Now, remember the minimum taxable for free meals should be 4,000 per month. So this one qualifies because it's 6,000. So if you are told the free meals provided by the employer is less than 4,000, you ignore it. But this one, if it's 4,000 or more, you include it. This one is 6,000. So you include free lunch. So we have free lunch. But free lunch is provided for them from the month of 1st August. So 5 months from August to December. 1st of August. 1st of August, September, October, November, December is 5 months. Yeah. Five months. So this will be 5 months times 6,000 per month. So 30,000 is free meals. We'll tax that. Number 3, he enjoyed medical allowance from the company, which is only available to senior managers. So it's discriminatory. The allowance was 12,500. So there is medical allowance. Allowance means cash every month. 12,500 a month multiplied by 12 months. A month. So 12,500. Get 150. $150. Then note 4, the company paid for him a life insurance premium of 4,800 per month for each member of his family. How many members were there? 3. Himself, wife, and daughter, but from September. This was paid by the company, so it's a benefit. So life insurance. It's the company that is paying. So for each member of the family, it was 4,800 per month. So there are 3 members of the family, or let me just say 4,800 times 3 members of the family, himself, wife, and child. And then from which month? himself, wife, and daughter from September. So September, October, November, December is 4 months. Times 4 months from September. So it was paid by the employer. So 4,800 multiplied by 3, multiplied by 4 months, and that's 57,600. Then number 5, during the year, the employer paid a total of 200,000 as school fees for his daughter. 200,000. This amount was allowed in the company's income statement. What does that mean? Allowed in the company statement means the employer was allowed to expense the 200 as one of the expenses, meaning the employer did not pay tax on it. It was expensed, it was allowed. So the employer got their gross profit minus expenses. One of the expenses was school fees. It was allowed, it was expensed, meaning the employer did not pay tax. Now he must tax school fees on him. School fees for the daughter. So school fees for the daughter paid by the employer is 200,000. Had the employer not expensed it, it could have been tax-free on Mr. Solomon, but the employer had expensed it. The employer did not pay tax. Note 6, he was provided with a fully furnished house together with electricity and water. The employer paid monthly rent of 50,000. Now that's the market rental value of the house, and deducted 5% of his basic salary. So cost of furniture is 240. So let's start with furniture benefit. So furniture is 1% per month of the cost times 12 months. So 1% per month. Furniture benefit is 28,800. That is furniture. What else? There's monthly electricity bill is 1,800, the actual. So that is the same as the rate given by the commissioner. So there's no higher. So I just use the actual. No, it's higher than the one given. The one given by the commissioner is 1,500 per month. So for the whole year, I think is 18,000. So this one is higher, 1,800. So I choose the higher. 1,800 times 12 months is 21,600. Then water. Again, 1,000 is higher because the one for the commissioner is 500 a month. This is double, so we choose the higher. 1,000 per month times 12 months is 12,000. So that's electricity, water, and furniture. What remains is housing benefit. Now, housing benefit will come back. Why? Because housing benefit is 15% of everything. The total gains from employment. So we'll come back to housing. We'll not forget that. So we'll be back to note 6 to calculate housing benefit. So we continue. Note 7, on 1st October, the company provided him with the following from October, November, December, for 3 months, a Land Cruiser, a house servant, and a night watchman. Okay, so we bring in this Land Cruiser from 1st October. So Land Cruiser is a vehicle. They are saying it was it was acquired at a cost of 3.2 million. The engine capacity is 3,000 cc. Now, there is a rate specifically for a Land Cruiser. If you check the top of your past papers, you're going to see something about Land Rovers and Land Cruisers. The rate is 7,200 a month or 86,400 per year. Then we'll compare. So compare first CC basis. For Land Cruiser per year is 86,400, but this was from October. So you must apportion. October, November, December is 3 months. So I can say 3 months times 7,200 a month is 21,600. 7,200 a month for 3 months is 21,600. We are still on the Land Cruiser. October, November, December is 3 months. 7,200 is the prescribed rate per month for the CC basis. The cost of acquiring it was 3,200,000. So we also use the cost 2% per month of 3,200,000 times 3 months, October, November, December. So this is 6% times 3.2 million is 192,000. Out of these two, choose the highest. So the highest will be 192,000. That's our car benefit. That's our car benefit Land Cruiser. Then there's a house servant and a watchman. So monthly salary for a house servant is 12,500. So there's a house servant. From October, so 12,500 per month times 3 months. October, November, December. So house servant is 12,500 multiplied by 3 is 37,500. That's 7,500 for house servant. Then there is a night watchman paid 15,000. So watchman 15,000 per month times 3 months is 45,000. They are saying the fair market value was agreed with the commissioner at 14,000 per month for each one of them. Okay, there's a fair market trend of value. So I'll change this. I'll take the higher. For house servant, the fair market value agreed was 14,000 per month. That's 42. I'll pick the higher. Here, 15,000 is high, so I'll take 45. So that's done. Note 8, he contributed 15% of his monthly basic salary towards a registered pension scheme that will give him allowable deduction, while the employer contributed 10% of his basic salary towards the same. So contribution by the employer is a non-taxable benefit. It will not be taxed, but I'll come back to contribution after we've calculated housing benefit. Then we can make the deductions. Note 9, other incomes for the year. I don't want to do other incomes first. I want to finish with employment. Note 10, dividend received from United Millers Cooperative Society and interest received from Fanaka Bank. Now I think we are ready to calculate housing benefit. So to calculate housing benefit, we get the total gains from employment. So we are back to note number 6. We want to calculate housing benefit. So let's get this total gains from employment. So 2016,000. Let's add This total is 28,32,500. 28,32,500. Now you can calculate housing benefit. You'll compare 15% of total gains, 28,32,500. Get 15% of that. Because he's an ordinary employee, so 15% is 424,875.
Excuse me, sir.
Yes.
I think you've done the wrong summation.
The total is how
Should be
much?
2,766,200.
Everybody else is getting that confirmed?
I think you should omit the 37,500. And
You're saying?
you should omit the 37,500 and the house servant.
Okay. Because I've taken 42. Yeah, you're right. So this is 27. Did you say 27 how much? Umesema ni 27 ngapi?
2766
2766
200.
200. So we'll bring here 2766 200. Then you get 15% of that. This is 414, 930. We'll compare with the market rental value. So market rental value of the house is what the employer was paying. And I think it was something like 50,000 for the house, yeah? Monthly rent was 50,000 a month. So the whole year is 600. Out of these two, you choose the higher. So I'll say HB for housing benefit is the higher or the highest. So the higher amount is 600. So that's what you select. But then you lessen his own contribution. So his own contribution was 5%, I think. 5% of his basic salary was being deducted as rent. So his basic salary is 168,000. So 5% of 168,000 will be deducted there. So deduct 5% times 168,000. That's 8,400. The difference is housing benefit. No, 168,000 is per month. That should be per month. It should be for the whole year. This is just for 1 month. Sorry, guys. That's just for month. Yeah, 5% of his basic salary. So I'll take 5% of the whole salary per year, 2016. To get for the whole year. This is just for 1 month. So it's 5% times the whole salary of the whole year, 2016,000. So that's 100, 800. So say 600,000 less 100, 800. So housing benefit is 499, 200. Then we deduct allowable deductions before we finish with the current employment, we go to deductions, allowable deductions. So the first allowable deduction is note 8. Actually, it's the only allowable deduction. He contributed 15% of his monthly basic salary towards a registered pension scheme, while the employer contributed 10%. You only use what he contributed. So you say less contribution to pension. So we have the actual amount. So you take the 15% of his basic salary he had contributed of 2016,000. 15%. So that's 302. 400. You'll compare with the set limit. The maximum per year is 240 or 20,000 per month. You deduct the lowest. So that's the allowable deduction. So this can give us the income from the current employment. I hope there's no other allowable deduction. I think we've done all of them. So you can get income from the current employment, then we look for other incomes. Okay, so income from the current employment is going to be 2766, 200, plus housing benefit 499, 200, less 240,000. So current employment is 30.5. That's current employment. Then we get other incomes. So other incomes. So note 9 says he had invested in real estate. So he has rental houses. So unless it's commercial building, for residential property, they pay monthly residential income tax. And you've been given there. Monthly rental income tax is 487,820. That is the final tax. You don't pay any other tax. So he had invested in the real estate from his rental houses. So these are rental property, not commercial. His rental income was 2,400,000 after deducting the following: caretaker's wages, fencing, loan repayment, monthly rental income tax. That's the final tax on residential property. That's the final tax. Insurance, rent and rates, advertising, partitioning, repairs and maintenance. So your rent is taxiwa, you don't tax anything else. So leave out note 9. Note 10, dividend received from United Millers Cooperative Society is taxable. Dividend from a cooperative society, but you have to look for the gross amount. So dividend from cooperative society, farmers cooperative society, but you have to get the gross dividend. How do you get the gross dividend? There is a withholding tax of 15%, which has already been deducted. So what we have is 85%. So we'll say 85% of dividend income from this cooperative is, this much is 306,000. What about 100%? So 100% of dividend, the full amount is 306,000. We divide by 85, we multiply by 100. So you get the gross amount. So I'll add it here. I'll say other income. You have gross dividend from co-op. So gross dividend from cooperative is 306,000 divided by 85, we multiply by 100 to get the gross amount. So we'll do that. So 306,000 divided by 85, because withholding tax is 15% times 100, so you get 360,000. So don't forget, for rental property, the monthly rental income tax is the final tax, unless the examiner tells you it's commercial property. Commercial property is like offices, godowns, shopping malls, things like those. So that's dividend. And interest received from Fanaka Bank, 240,000 net. So interest received from the bank by an individual, withholding tax of 15% is the final tax. You don't tax again the interest. So this is all. For the interest, the withholding tax of 15% that was charged at the source is the final tax. So his total income is 33,85,400. So this is called the total taxable income. 33,85,400. Any question? That is the total taxable income. So the next requirement, we are supposed to calculate tax on that, 33,85,400. So determine the tax payable from the income computed. So let's determine the tax from the income computed. So Roman 2. So again, as before, use the graduated scale. So on the first, 288,000 per annum. The rate is 10%. The tax is 28,800. Then on the next, 100,000. 25%. You get 25,000. Then the next should be a big amount. So this is only 3 million. So the third band should be up to 6 million shillings. So that's where we'll end. So just say 3,385,400 less what? 288 plus 100 is 388,000. At the next rate is 30%. The third band is 30%. So 30%. So we'll work out that. So it's 33,85,400 minus 388,000. So that's 29,97,400 multiplied by 30%. We get 899, 220. So we add everything. We get 953. $0.20, that's the gross tax. Again, as before, now you remove the set-off taxes. So what are the set of taxes? There is tax at source. So we say less tax at source. So our amount of payee was 48,000 per month. So I'll multiply that by 12. So 48,000 times 12 months, 576. That's tax at source, 576,000. There is life insurance. So we'll get insurance relief. Insurance relief is 15% of premiums paid during the year. So premiums paid during the year for life insurance, let's see. 4,800 for each member of the family. The total was 57,600. They only paid for 4 months life insurance from 1st September. So we'll get 0.15 times 57,600. So the relief is 8640. Then we have included gross dividend from a cooperative society. There's withholding tax. Kuna withholding tax on dividends. Ile dividend ya co-op must be of cooperative society. So 15% of the gross is 360,000. 360,000. That's 54,000. You'll be withholding tax on dividend. Sasa bado personal relief. Of 28,800. That gives us tax payable. So we just do the set off. So 953, 020 minus 576,000 minus 8640 minus 54,000 minus 28,800, and the result is 285. So that's the tax payable. Any question? So I'll give you an assignment. You can try. Otherwise, I consider that we've finished with employment income. Our next topic should be taxation of business income. But you can try, I think April 2023, there's a question. You can try this as an assignment. April 2023. April 2023, we have question 3D. So question 3B. Question 3C. Oscar Ebala. Question 3C is called Oscar Ebala. April 2023, question 3C is called Oscar Ebala. Try that as an assignment question. Otherwise, in our next class, we're going to start on taxation of business income. Taxation of business income. So business will include sole trader, partnerships, and we'll also introduce companies at some point. So we'll be looking at taxation of business income. So with that, I think we are through for today's class. Unless there's a question, you can ask anybody with a question. Anyone? Very well then. Please enjoy the rest of the evening. So we see you next week. And I encourage you to try the assignment question. At least familiarize yourself with employment income. The next week we begin on taxation of business income. Asanteni sana. Enjoy the rest of the weekend.